Heidi ho, everyone, and welcome aboard. It is a brand new week, and it's wonderful that you could be with us. Very, very pleased to have your company. And yeah, it's Monday, 24th of August. Can you believe it? Change of season just about to come. And that's probably a good thing here in Tasmania because it does allow the temperature to get above freezing in the mornings. And we do see a bit of sunshine when that happens. And I'm very, very pleased that that's the case because it makes the bamboo grow. And when the bamboo's growing, everybody's happy. Guys, go to the other link from Swee. I'm not sure what that means. Is that to me, Swee? I don't think so. Sounds like there might be an issue with YouTube. I could be wrong there. One day technology will be my favorite thing. No, don't see that ever happening. Anyways, it looks like there are a few people in YouTube. I'm just going to keep going. I haven't found Ash yet. He could be lost as well. Anyway, we'll see how things go. Somebody will tell me if I'm wrong, but this should be the right service that we're on. And with any luck, it is. So as I said, I'll keep going. And first thing we'll look at, of course, from my point of view, is the pound breakout trade, which it's been very checkered, hasn't been going that great of late. Although if I look at that chart there, if you were trading on Friday, wow, you probably had a, well, yeah, you probably had a good time of it on Friday. Not too sure. Where's the 9 o'clock bar? Let me have a look at that. 7, 8, 9. Yeah, you can only win on that and win handsomely, I would have thought. So the low, you would have traded that bar, stop loss there, 12.5 pips. You would have got stopped out. Trailing stop still there. You wouldn't have got stopped out until just now. Wow. So 5, nearly a 6-to-1 trade there on Friday if you were trading that break. Wow. Why doesn't that happen on Mondays? Don't know. Anyway, here's the order for today. And my goodness, I've almost missed it. Buy stop at 131.12, which is very close to where we are. May not even let me in like it didn't the other day. 131.12, and the stop loss will be at 130.94. Oh, okay. That's interesting. Ash is in another room. Bear with me, guys. Okay, we've got an issue. We've got 2 shows going here at the same time. Just give me a few ticks, guys, and I'll sort that out. And I will be back with you if that is indeed the right thing to do. Otherwise, we'll have to put you in the other show. Bear with me a tick. Oh, okay, guys. I should be back with you. I think we're in the right room, but yeah, this is very, 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 very confusing. And I apologise. Where were you, mate?
Who, me?
Yeah, what room were you in?
The old one. I couldn't see it in the new one. Is it in the new one?
Yeah.
It's the new one, is it?
Which is where I thought it was supposed to be as of today.
Yeah, I did too. Which I went there first and I couldn't see it, so I came to the old one.
Oh.
Yeah. I don't know.
Okay.
But anyway, we are in. We're okay, aren't we?
Well, I don't know if we're okay, but we're in. Hang on, I'll just go back to YouTube. I think, yeah, we've lost a lot of people. I don't know what's going on here, really. Really don't. I'll just refresh that page and see if we're actually streaming.
Yeah, we are streaming. We're okay. Yeah, everybody's there.
Okay.
Hi, Crystal. Hi, SF. So sorry, mate. Anyway, let's get cracking. We're okay now, I think.
Yeah, it's only time to close now, so we might as well start. Righto, I'm in the pound trade already.
Oh, great, mate. Okay, well,
no, it's not so great. It's actually negative at the moment. But if you want to, if you want to trade it, then by all means do so, guys. But again, don't forget it's in beta mode. We do not put serious money on this in any way, shape, or form. We've got to sort it out first. Entry today is at 131.12, and the stop loss is at 130.94. Now I'm already in. You guys would not be if you haven't obviously got those parameters, or if you don't wish to be. And I would completely understand if you don't wish to be. As I was saying at the top of the show, had you been in on Friday, man, you would have had a good ride. You would have had a really good ride. Entry on that bar there, stop loss there. You couldn't have got better. About 6 to 1 on that one. Very interesting. But that was then. This is now, and it's a brand new week, mate. How was your weekend, and what are we looking at?
Oh yeah, a really, really nice weekend I had, mate. Thank you. We are certainly looking at markets pushing higher, and I am looking at them pushing higher into the Fed meeting on Thursday. So we can have a look around the grounds. Now, really, we've got to try and get into something if we can. We're going to wait for a pullback here, but markets are looking pretty hot. So I will share my screen if that's all right with you.
Happy days.
Okay. Oh, hold on. You might have to give me some power.
Oh, okay. By the way, TP1 on this long, if you want to get into it, guys, will be 9 pips. So 131.21 will be TP1. And take half off, move your stops 9 pips below entry. Okay, now give Ash powers. There you go, mate.
Thank you very much. So yeah, we are flying quite a lot at the minute. So we've got to try and get in now. My favoured market here would be the DAX, but let's just see what we need to see on all of them. Well, all of them, certainly 2 of them, and we will have a look. So let me just bring in some pivots here as well, if I can. Here we go. Right, so this is what we got with the FTSE 100 right now, and it appears to have broken through this this level here. Really nice touches along there, right through the monthly pivot. Opened straight out of the traps this morning with a move to the upside. So 6 in the morning, we've just started this move to the upside, and it looks pretty bullish. I think we've had a pretty decent handover from Asia, and when we look at this FTSE, it by all intents and purposes, it was looking like it was weakening, but really we're still caught in this range really right now. And just the way that global markets currently are, I think it's probably wise for us just to continue with the current trend. I have been looking at some data over the weekend and saw some pretty I don't know whether you could call them disturbing, but certainly worrying signs in some of these currencies and the stock market. Namely the commitment of traders I was looking at. And what I saw in the commitment of traders was just a complete lack of buying and selling in the S&P. So the volume has just dropped off. And that is concerning because these rallies, even though we've got to take advantage of them, these rallies are looking like they would lack, something of, some form of stability in many respects. So we've got to take advantage of them, but we've got to be careful at the same time. Now, that does mean that if we can get in, we've got to try and get in and get those stops to break even, and then just ignore it effectively. Let's take advantage of any rally that is going to continue to the upside. But it's starting to look like an exhaustive rally. Looking across the board, look at the S&P, broken through that upper band and the all-time highs now. With some significance on the day as well, just the way it's currently going, but that could start being a bit exhausted. And we are looking at the DAX, which is my favored one. This is the one I'd like to get into. So maybe if the DAX pulls back to the daily pivot, there may well be an opportunity for us to get in there. But it's got to be today. Wouldn't be interested in the DAX closing up its highs and then trading this tomorrow. There looks to be emotive moves going on right here, right now. And as I say, they may end up being exhaustive, but I think the exhaustion would more likely come in tomorrow or at the end of the week. So I'd like to trade the DAX as well to the upside. Let's see if it can also start to break through levels. But the market is running hot. So if the market is running hot, then we need to try and be on board with it really, and not ignore what we're seeing. We do need to be aware. So this is going to be something that we've got to pay attention to. And there's very few indicators that I really like. I mean, I use a moving average cross and I use an RSI, but generally speaking, when I say I use them, they're on my chart because when I started learning to trade, they were on my chart, so they almost kind of like become like a comfort zone. But I don't really refer to them in the same way. I'm much more into just looking at clean charts and clean price action. But the one indicator that I would advocate is the average true range. And if we think about the average true range and what it is, it's a calculation. So just so you guys understand the way the average true range works, because it's quite important to understand these indicators before we use them. Now I'm just going to change my, oops, not that one. Must be 2. Yeah, it's 2. So I'm just going to change my pen over. Okay, so average true range and what it breaks down as. Some of you may know this already, but if you don't, then this is a useful thing. So it is the ATR is the calculation of the high to the low. So it's the range of the day. The range of the time frame you are on. So we're basically calculating the high to the low, and then this period here. When we look at the period here, that just dictates how long a period we're analyzing. So if we're looking at 14-day, what was the last 14 days ATR? If we're on a daily chart, so we could change that to 30. We could change it to 6 months. Now, it's probably wise to kind of like go back as far as you possibly can because it won't give you a true reflection. But the most recent data is probably the most important, and really it's a gauge of volatility. So if we bring in, let's go back to February. So 7 months. So really 210 would be a good number, but that actually might be a little bit too far back. So let's do month over month because we can still see how it looks over the state of August. So we'll change this to I'm going to change it to, actually I'm going to change it to 22 because there's around about 22 days per month. So it doesn't really matter what you do there, but let's change it to 22 periods. Right, now, when we look at this, let's just first look at the FTSE, because we're probably all a little bit more aware of the FTSE. Then you can see that the average true range currently is at 111 pips. Now that's 2% ish. So that means that it's likely from low to high on a day over day basis to travel 111 pips. Now it's important for us to know this, because when we bring this in on a daily time frame, the low right now is down here and the high is at 90-ish. So that means the run, the likelihood that the run has got much more than 20 pips at this particular stage, if we're looking at the average, is quite slim. And you can see it here. This is the hourly. So hour over hour, the average true range is around about 20. Now we do want a decent average. The low down here is 15. The very highest point is 23. So somewhere around the 20 pip mark is about right. And again, let's have a look at the first hour. The first hour is up 40 pips. So it's up double the average true range, suggesting that we shouldn't be getting into this market at this particular time. Okay, so that wouldn't be any, that's no good for us. So we are looking for pullbacks, and I'd want to pull back, you know, well, if the average true range is normally 20, then that kind of gives us the pullback to 60.74. But it's you know, it's a pretty emotive bar, and it could come back a bit harder than that. But markets are off to the races. But this also shows us a little bit about the potential for exhaustion as well. Ash, where do you get the commitment of traders? The COT report is freely available data on the CFTC website. So you can, if you just put in the COT report, then you can go over to the CFTC website and you get indices, but it won't do the FTSE. There's just no COT data for the FTSE, but you will get the Dow and you get the S&P. And it is, you know, it's a bit of a trawl. You have to kind of go through the data and have a look. There are websites that do it for you, but I've used some before and I haven't found them to be as useful as going through the data myself. So if you're not really sure what you're doing, then it's worth just going and you know, buying a subscription for a period, which is basically what I did. I bought a subscription for a period, and I kind of understand the COT data now. So now I'm doing it without looking at the subscription, you know, because the subscription based place, they're pulling it from the CF the CTFC website. So it's the let me put it in. If you put in let's see. Commodity Futures Trading Commission. So yeah, CFTC website is what you want to go and have a look at. But as I say, I wouldn't bother with it if you don't really know how to read the data, because it is just a whole bunch of numbers. So ATR is just telling us the range, the average true range between the highest point and the lowest point of any given period. So we're currently on the hourly bar here. We're currently on the hourly chart. So you basically sort of like looking at the ATR being the high to the low, and it tells you the average range of each period. So this one here is when we scroll over it, this one here is showing us on the right hand side. Oops. Right hand side over here. It's going to come in over here. Show me 21. You know, so it's telling me that the average range of an hour over hour is from high to low is 21 pips, and this one's already gone. This one's gone 50. So the likelihood that was going to go higher was quite slim, and that's really what's happening now. It's starting to pull back again now. So you can do this on any given time frame, and you know, you can set your parameters the way that you feel most comfortable with it. This is the daily. And over the daily time frame is telling me on average over the period that we've chosen here over 22 days, the average currently is around about 112 pips. So if you were to put in 30 from and you're looking at this point, sorry, 22 from this point, it's telling you that over 22 periods, this is the average true range of the last 22 periods, 384. So look how much the average true range has died down, and this can tell us a lot about the type of traders we need to be at any given time as well. But what we're looking at is a average true range that's saying from the highest point. So if you were to pick the very lowest point, let's say CFTC Shukri yet, if you were to pick the very lowest point on the chart on the bar and trade it to the highest point of the bar, which is very unlikely, obviously, but if you were able to pick the very low to the very high, then the average return would be 111 pips currently. So it's not about the close; it's about the range of each bar. So that can tell you a lot, because if you're looking to trade, if you're a scalper, and this is something that scalpers completely miss, they which is why and Jeff, I don't mean to take words out of your mouth, but this is why Jeff does what he does, where he takes profit in a certain area and doesn't extend himself by trying to tell the market how much he's going to make. He's allowing the market to say, this is what's on offer, Jeff. So, take it or leave it, effectively. And it is that you take it or leave it. Don't try and say to the market, yeah, but I'm going to get more out of this period. If we go to a 30-minute chart on the FTSE, and the average true range down here is 11 pips, and we put in a target of 30, then we're saying that's what we're going to make. That's what we're going to make out of the next half an hour market. So give it to us, because the market is just going, no, what's on offer here currently is 11 pips. That's what's on offer. So if you trade this, well, on average, that's what's on offer. If you trade this from the very lowest point to the very highest point, what's on offer on average is 11 pips. Now this went up 50. So of course you may have made that, but it's not sensible over a long period of time to expect too much more than the average true range is giving you. So it just kind of keeps you honest, and it'll keep it's an indicator that will keep you. What's that? Why are you laughing? You're gone. I've lost you. Where you gone? Where you gone, Jeff?
It keeps you liquid as well, mate.
It keeps you liquid. Yeah, keeps you liquid.
Sorry, mate,
keeps you liquid. No problem. Sorry. It keeps you liquid, and it keeps you honest. So that is what we're looking at. Yeah, there you go, Shukri. Yes, perfect, mate. Yeah, exactly. It's something that will help you, but it's an average. And this is the interesting thing with cryptos is they continuously outperform their averages on just about every occasion. But I suspect with something like Bitcoin, you're much more likely to get more of a flattening curve with it. But some of the new ones, I don't know how you'd calculate it. How should the ATR? Well, Sino, it's very personal, but it comes up with 14, but it's telling you 22 is quite good over a you've got an ATR setting, mate. And what do you use when you use it? Oh, he's still on the phone, probably. 22 is quite good.
No, I'm actually not on the phone. But what happens when my phone rings? Because I'm on my phone is running the webinar. Someone rings me and I cut out.
Oh, I see.
Man, it's great being on holidays, but it's flaming
frustrating. Yeah.
Frustrating when you haven't got a good internet connection. But sorry, ATR. Look, mate, one of my favourite subjects, isn't it? Really, ATR. It isn't relevant if you've got wide stops and you're trading on maybe daily charts or weekly charts. Totally irrelevant. But when you're trading on smaller time frames, 30-minute charts, which is my go really, on when I'm trading smaller time frames, which really at the moment I haven't been too much, but when I am, it's the Bible,
Yeah.
As you said before, why try and tell the market what you want if the market won't listen? you have to take what's there.
Yeah,
It's as simple as
exactly.
that.
Yeah,
And look, if
exactly.
you've got wide stops on your daily chart, that 30, 40 pips, whatever it is, doesn't really mean much to you. But 30 or 40 pips, if you've got a risk of 10, is great.
Yes.
Pardon me, I have to cough. But you have to then make sure that that 10 pips is going to be a winning trade for you, not a losing trade for you. And the only way to do that is to take profit at a resistance area, which is above you or below you, depending on which way you're going, because the chances of the market coming back in 15, 20 minute, half hour, 1 hour increments is extremely high, because they're intraday resistance levels. That's what they are. So your 10 pips is very, very tenuous in those circumstances, and that's why you have to take profit. And that's my entire strategy is based around that, frankly.
Yeah. So we need to know what the ATR is, just so we can see what is there and what's on offer for us. But yeah, sorry, Sino. So the setting that was the question actually, Jeff. What's the setting that was would be the best for the ATR?
The setting.
Yeah.
I use probably 20, which
20,
is
yeah,
basically a month. But I use the pivots to tell me what pretty much the average range is anyway. The pivots are telling you pretty much the same thing.
Yeah.
DR, DS 1 and 2. They're pretty much telling you the same thing.
Yeah. So if we look at that, so I'm not sure if I've got DR.
If you look at the distance between DR1 and DS1, it will probably be yesterday's range. In fact, I think it is yesterday's range.
Let's have a look. No, I've only got. Not sure where all my options are on this. That's strange. Okay, no problem. I can have a look on a different chart between DR and DS1. There's DS1, DR1. So on the FTSE, yeah, it is about right actually. On the FTSE, that between DR and DS1 is about 101 pips, and if you look on the daily chart, the average true range is currently sitting at 112. So yeah, and you could probably.
Was that the distance between DR1 and DS1?
Yeah, pretty much. Yeah, within 10 pips. Yeah, and maybe on that, maybe that's one way you could tidy up your ATR, because it's going to change very, very slightly. Now that's popped up to 114. So this is suggesting if we were able to do that over a long period of time, and I've never done this. I'm just kind of thinking out loud. I wonder if a way you could tidy up your ATR setting is to get it as close to the DR and DS1 level as possible, and then you have an ATR setting which is a bit more accurate. Now this is average true range on 18. Oh, actually, that's gone up a little bit. Yeah, so it does look like around about the 20, doesn't it? It does look around about the 20, but 20 between 20 and 24, I would have thought is pretty good, Sino, because that does give you a month of trade. That's pretty much a month's worth of trading days on a daily chart. But you might want to check a slightly different period. When you were over here, then you may want to start looking at, in this area here, the last few trading days were a lot more significant than the ones that happened before it. So you might want to start kind of like shortening your horizons a little bit when you look at the most recent price action moves there. But in a normal situation and a normal market, then I would have thought a month's worth of data is around about right. A month's worth of trading days is probably around about right.
Pretty much the way I use it, mate. Yep. And really, I only use it if I see that the market is getting a little bit overextended. So if I'm outside, let's say we started the day at DS1, and if I've then gone above DR1, I want to, well, hang on, something's going on here. We've just gone the whole range of yesterday, and you can see that in the bars anyway if you want to, but then I'll start to have a look and say, well, okay, yesterday was an anomaly. It was only 40 pip range where the ATR over the last month is 75. So therefore I'm okay to continue going in that direction. But if the ATR is similar to what yesterday's range was, over the monthly ATR range is similar to what the daily range of the previous day was, and therefore I can go outside of DR1 and DS1, then okay, I can go. But it's really only pertinent to me when the market has moved a substantial amount during that period or during that day.
Yeah. So effectively, yeah. So
pretty much
so
why
Helen,
you brought it up, because your market's moved substantially, right?
Yes, it has, and what I'm saying is there's no point in diving in here.
No.
Even though it looks pretty bullish, there's no point in diving in here. It might go up, but let's say so you got FTSE closed 14 days ago. I mean, if we got a 14 period, this is 22 period, but if the FTSE closed at 14 days ago at 6,000. Sorry, the very highest point. Let's say, in fact, the low was 6,000 and the high was 6,024 on day one, and then you go day two. So that particular would give you, that number would give you 24. So the high to the low. So we're not looking at thinking about the OHLC bar. We're looking at this to this. So if the range from high to low was 24 pips from this point to this point, that's day one. So 1 is 24, and let's say 2 is 26, and right the way through. Then you get up to 14 if it was a 14 ATR at 50. You would just add all those numbers up and then just divide them by 14, and it would come out with a number, and it would probably be, you know, whatever it would be, somewhere around about 20 or something. So that would tell you on average the high to the low swing is 20 pips. So when you get a day like we have today, I mean, this is a very unusual day right now, which means that there should be day trading opportunities today, and we do want to get on board with this. But they haven't really they haven't shown themselves as yet. But there are going to be opportunities. Now, I suspect the opportunity is probably for a short. Well, let's have a look where the resistance point is. I'm not really sure where there is a resistance point. But let's say we get all the way up and through here. I mean, that's going to be another 106. I mean, that is going to be a huge day, and it would suggest that this market might well get a bit exhausted up these highs here. So there may well be a move to the downside if it gets up there without any question and without any retracement. But if it comes back a little bit to any of these points, what we should be doing is marking off potential areas we'd like to get in. I'd like to get an assist 60.52. Will it come down there? Doesn't look likely at the minute, that's for sure. Is there anywhere higher I could get in? I don't know. Low to high on the fib. Doesn't give us too many opportunities either there. On a 4 hour, don't really see too much, which yeah, maybe 60, 65. You know, that coming back might provide an opportunity, but that again doesn't look all that likely at this particular stage. But it looks like the market's got some room to run, doesn't it? Doesn't look like it's on its way back at this stage. So so that's the way that can be used. Now, the other thing that I thought was incredibly concerning over the weekend was the Swissy, where I have just seen a stacking up of Swiss shorts in the market. Now, where are we with the Swissy? CAD Swiss is pushing there. Now, the good thing about this is this gets us way out in front. Now, I didn't get the opportunity to check lots and lots of COT data, but I did check the S&P, and I did check the Euro Pound, and I did check the CAD Swiss. Euro Pound commercials are way short on the Euro Pound. You know, just no positions at all really. But the asset managers are very much in a long position on the Euro Pound, so they're making a bet for a long. You know, the big traders are making bets on the long with the Euro Pound. So, you know, it's a difficult one to read, the euro pound, but if that starts to stretch through that point there, I suspect we're probably going to get a whole stack of longs coming in. So waiting this one out. Now we know what the big players are doing is the wisest choice, because it is in a range. We still need price action really to kind of give us the green light to go. All the COT data is really telling us is that we should be on alert for buy signals in the euro pound, and short signals don't become quite as attractive in this particular scenario. Now with the Swissy, it's the same thing. If we start to see buy signals in the dollar Swiss, or you could pick your poison, maybe the Aussie Swiss might be a better one. And really, we'd want to compare another currency. I don't see too much confidence with the dollar, to be fair. But if we see some confidence coming in with one of these other currencies, the Swissy looks like a short. I don't know what you're reading on the other minutes on the Swissy, mate, but the Swissy is looking like a short. Well, look at it against the yen. You know, maybe we like it against the yen, and the price action is suggesting that we should be on the short side with the yen. Now we know that the yen and the Swissy both act as a bit of a protection play. And the markets are currently just on a tear to the upside right now, which is fantastic. But how long that lasts, we don't know. And if it does continue to last, then it could be that that we don't get an opportunity to trade the yen or the Swissy for a long. But it does suggest also that maybe we could look at one of the other more bullish currencies to trade against the Swissy, but the Swissy would be one that I'd be interested in for a short. But I don't know what you got any opinions on the Swissy?
Yeah, I do. It's been, fairly poor for the longest time, actually, the Swissy. It's been on the lowest or lower end of the table versus the US dollar for quite some time. That said, against the yen, it has been reasonably strong. Now, we have had a pullback on the yen, and the question in the box from, I think it was from Sino maybe, was, do I think that's, or maybe it was Emmanuel, I'm not sure, because I haven't got it in front of me. Are you done, mate? Will I share screen?
Yes, I am, mate. You go ahead.
Right, Joe. So when I look at Swissy yen, and I see this rally that we've had, and you'll recall that we were looking for this some weeks ago, and I believe, and did believe, that it had found a resistance level and was looking for shorts last week, as you will recall. Now, whether that's sustainable in terms of, are we going to the bottom or where are we off to? No idea, absolutely no idea. But what I can see very clearly is that we're in a very big box range. And if you can't see that, I'll put that on the chart for you. How do you get rid of these stupid things like that? So we're kind of in here somewhere. You might even go a bit lower and use that low there. But that's pretty clear to me. Answer, have we reached the top? Are we coming off the top? Oh, sorry, question, are we coming off the top? I don't know. I have no idea. And all I can go by at this point is that that's an inside bar. It is not an engulfing bar. So it's not telling me that we've got a chance to go short. I see an untested monthly pivot below, but I also see these highs that we haven't tested above. So I've got very mixed feelings. And when I look at the daily chart, I can see that we've gone into a range. And for that reason, I'll then go down and dig down further and see, well, okay, is that range very clear? And at this point, really, it's not, because it's embryonic, if you like, or it's a range under construction, the way I put it. But you can probably start to think it's in here somewhere, and I get that, and I'll go with that. So that's going to be what shapes my my bias. And as soon as I see rectangles start to form, I then look and say, well, maybe that's even there. But let's, for instance, go to that level. I start to think, well, okay, if we're in range, guess what's going to happen next? We're going here. So that's exactly the way I'll play it. But I won't go, okay, it's bounced off the bottom. Now's the time. I've got to wait for a signal. And that was probably it there, the higher low. that we got. But I wouldn't trade that. And the reason I wouldn't trade that is because it's a white bar. And I don't trade buyer bars long in general terms. In fact, I can't think of a time where I do, but there'll probably come a time and I'll make a mistake. I don't know. But I would wait for confirmation of this bottom, if you like. And the way I'd like to see that play out now would be a bounce off the daily pivot, come down to here, give me a bar that looks like that, for instance, or that, for instance, or that, for instance, something that's got a tail on it but got a black body, and then I'd be willing to go long. But at the moment, from an intermediate or a medium or long-term point of view, I haven't got one. Really haven't got one, because I can see a case for both directions here in the medium term. So I'm out of there. I only want to trade it inside this box for now. That would be my answer on Swiss yen. I know there are a whole heap of other questions. I've got to get them back up. I don't know where they've gone. They've disappeared. I know where. There they are. As far as the Swissy, and to answer the question, is it enough retracement? My immediate answer is probably not the answer that you wanted to hear. But I think in general terms, I'd be looking for a strong level of support if I was to call a resumption of trend. And really, I don't see that as a strong level. It is a level, there's no question. So it could bounce there. The strongest level on that chart is probably a little bit lower. And I know it hasn't been support to a degree, but by gee, it has actually been support, but only the once. But I think that's probably the strongest level on the chart, and I'd be starting to look for longs at that point, based on the trend. If I was looking to trade trend, and I'm not, but that's what I'd be looking for in terms of retracement. Certainly the monthly pivot. So I hope that helps. Trade the box is my advice at this point in time. Let me go to these questions, and then I'll get on to what I'm actually looking at this week. Sound trails off after I start talking. Is that still the case, Helen, or am I okay? Swissy shorts means buy dollars. Oh, it's got $1 in it. Sukri. I don't trust the dollar, but I'm starting to get to the point where I'm happy to trade it. Dennis, no. I hope someone is taking intraday long on gold and silver right now. That wouldn't be me, Dennis, because I don't trade them. But if that's the case, then I hope you go hard. What did DR1, DS1, and so forth stand for? I see them on ATW's MT4, but don't quite know how to use. Okay, they're pivots, pivot points, Sino. And if you know what a pivot point actually is, then you can work out what DR1 and DR2, et cetera, are. So a pivot point, or the daily pivot, is really the daily high plus the daily low plus the close of the day divided by 3. So it's a mathematical equation that gives you, I guess, in layman's terms, the mean of the previous day. Basically, average, read average into it. It's not that, but it's close enough to that. So that's the pivot point, or daily pivot, as we call it. DR1 is the same calculation. Well, actually, is it the same calculation? I think it is, for daily resistance. So if daily resistance becomes a calculation off the daily pivot, I think there's actually another equation for it, something like 2 times the pivot minus the daily low or something like that. It's quite complicated, but essentially it is, as I said before, DR1 and DS1 is actually the difference between the high and the low of the previous day. Let me put it that way. It's actually the range of the previous day, and I'm pretty sure that's accurate. But there is a calculation for it. Really, I don't know what it is off the top of my head, but it is, let's say, the mean of resistance for yesterday, if I can put it that way. But it's a pivot. It's a pivot point, and very, very important in my trading. I wouldn't be without them. It's kind of like going to work without your toolkit. wouldn't do it. Always on my charts because I rely on them very, very heavily, and it saves me doing the calculation basically. So I think that's all that relates to me, or maybe not. Let me have a look. Dollar index, yeah, I'll have a look at that. The tick Shukri. Yep, pound's gone again through the stop loss. That's true. That's why we shouldn't be trading this at any reasonable money on the table, guys. It's totally in beta trade mode at the moment. Jeff Religion. Was that wine or pivots or DXY? Things. They always call you at YouTube. Yes, they do, for some weird and wonderful reason, Helen. It's amazing. Bitcoin and Ethereum, right, I think we're up to speed at this point. Oh, EuroCAD, sell said daily. Any thought on EuroCAD short on daily? I sure have. EuroCAD daily, sell 156.45. Did we trade that on the daily, didn't we? Otherwise I wouldn't have it there, would I? Yeah, we traded this bar here. First, we traded that bar there, didn't get triggered. Then we traded that bar there on the daily chart. And that's why we're in now. I think the previous time we got in may have been on a 4-hour chart, not sure. So what are my thoughts on EuroCAD on, sorry, what chart? The daily. Yesterday's daily? I wouldn't be trading that in 100 years. Well, 99 maybe, but the only way I'd like to trade this at the moment, if I wasn't already in, would be to see it come back, maybe to the daily pivot, maybe even to the weekly pivot, or the level that's been broken, which is what, 156-ish, 1.56. I wouldn't be jumping in now, no way. And that doesn't mean, of course, it can't keep going. I hope it does, because we're obviously trading that, but I'd be looking for a pullback before I got into EuroCAD. That is absolutely for sure. Let's go to my watch list, shall we? Just to give you guys a catch up on where I'm up to. First one is Pound CAD, and we've missed it. Dash damn bugger poop. Yeah. Reason I like this, in fact, I shouldn't be disappointed because I need to see a pullback before I trade, exactly the same as I just said on EuroCAD. The reason I'm disappointed is I want it to come back. I couldn't have traded this, no way. It has to come back to here before I'll trade it, and that may yet be the case, no question. Reason I liked it so much, and as you all know, I'm bullish on the pound, but not necessarily against the CAD. Reason I liked it was because we've gone into a range, as you can see here, which is why we've got the box around it. But this bar here, Friday's bar, engulfed, I think, 8 trading days. 1, 2, 3, 4, 5, 6, 7, 8 trading days. It's got to mean something. And for that reason, if we were to get the pullback here, I'd definitely be looking to trade this short, and no qualms about it. If I look at the bigger picture on this, same applies. We've had big bearish engulfing bar, lower high, lower low, lower high. Now we're seeking another lower low, if not the bottom of the range. So that's what I'm playing here at the moment, Pound CAD short. So it's definitely on my watch list. And H4, can it come back today? It's unlikely that it will come back and give me an opportunity to trade it. So it's probably a tomorrow, Wednesday or Thursday thing. Euro Swissy was another, also gone inside the box. And this one looks a bit weird, actually. It's got kind of 2 levels, hasn't it? You can see it's like a cityscape where you've got the real big skyscrapers and then the rest of the bunch down here. The thing I like about this so much is that it's found its way above monthly pivots for 2 months, if you like. And aside from that bar there, nothing has been able to get below that monthly pivot. In fact, that was a gap that got it below the monthly pivot. So, and there's certainly no closes below the monthly pivot for, 6 weeks or something like that. So I don't see a reason why that would change right now. And going back again to what we've just spoken about on the Swissy, we've got a tendency to think that's maybe going to be bearish. Then we're looking for longs here. I don't know how much for, and maybe we can look at this level here, the cityscape, if you like, as if the Swissy was to strengthen, because I'm not a fan of the euro at the moment either. Maybe we can look at that level with a little bit of caution. We'll see. But certainly I'm looking on the smaller time frames for a buying opportunity. And having bounced off the bottom of this range so many times, I'd like to see, yeah, it's getting a bit tough now for certainly that candle. I think I'll have to come back below the daily pivot now and put in a higher low here with a candle that looks something like that. It's definitely too late for that bar, but the market's a little bit fickle over the last 4 hours, as you can see. That's Euro Swissy, but I do like the fact that we're in the box. I was going to go with dollar yen as my watch list, and I suppose it's there, and you know, pretty much for the same reason. Have a look at this level where price is currently. We've got this resistance area over here, a little bit there, but the support is just amazing at around about the 104.70 mark, and we've come off that again, closed above this 105.83 mark or whatever I've got it as. And that to me looks like a buying opportunity. But such is my disdain, if you like, for trading the dollar at the moment. I don't want to get exposed to it too much. I know we're in Aussie to US dollar short, and that was very, very juicy. This is not that. This is not a juicy setup, because look at the price action here. It's really a bit weird and wonderful, and which way we're going next, I really don't know. I can make a case for either on that chart, and for that reason I said no, I'll leave it alone. And I opted instead to go with Euro Kiwi, which was on last week's watch list, and we were looking at these two bars here, these two, and we were waiting for a lower high to actually trade this short. It didn't come until this bar here, which really isn't a lower high, and it's certainly not a bar I want to trade in this context, because we now have gone into range again. But I still see those two bars. I still see this level, and I see a third rejection of that particular level in the last 4 trading days, make that 5 or 4 out of 5. And I think I'm ready to trade this short. I just need the right signal. Maybe it's coming. We've got a daily pivot here that's been in concert with the weekly pivot and that level that we just had a look at, which is strong. I think a close below the pivots here and a white body would get me interested. So we'll take a good look at that. There is another option, and that's to wait until we get up to here, but still a lower high. Still looking for a lower high. We've got a bearish engulfing bar. Technically haven't got a lower low by my standards, but a lower high here will certainly get me interested around about the DR1 mark, but I'm certainly willing to chance my arm if I get a close maybe below the pivots here, but a white bodied bar. I might still look to trade that short. And finally, Aussie US dollar is still on my watch list, although we're in the trade already. So what I want to see here is pretty much what we've been delivered thus far today. If I have a look at this, I was definitely looking for a pivot test, and would have traded that bar had I been in front of the charts. No, I wouldn't, because it's preceded by a low test bar. So low test bar, high test bar, no good for me. But if I saw that bar, or that bar that looks like that on the weekly pivot at this level, which is a nice confluence area already, then the lower high really does get me interested, and I would look to trade that short. So that's my watch lists, and I haven't gone, well, to be absolutely frank, it took me a while to come up with that when I was doing my analysis yesterday. And I think there's a lot of currency pairs which just aren't measuring up to tradable standards, I'll put it that way. I think they're a bit of a mess and a little bit confusing, but those 4 or 5 really if I throw in dolly yen. No, I won't throw in dolly yen. Those four are pretty clear to me what I need to watch. Helen, Dennis, Flo just checked. No. Beautiful pound CAD. Oh, for the analysis. Let's hope that works, mate. Yeah, let's hope we can get into it. Jeff, EuroCAD Weekly has made a cup pattern. Are your opinions on the cup pattern? I don't have one because I don't trade it, but Ash does take some notice of it. So I'll give him to you in a minute to comment on that. Is there any wine in the cup? Now I'm getting interested. So I know. Sorry, Dennis, as well, if that's the case. But the answer is no. Let me have a look at it though, EuroCAD, and I'll give you my analysis on it, and I think it's got huge potential. And the reason I think that is go back to these little, what do I call them, rabbit ears or Batman ears. I can still see a Batman mask here. I don't know.
Yeah, I see that, mate. I see that.
You got Batman?
Yeah, like the Batman.
Yeah, he's coming up, I reckon. So he's down here. Batman's mask is completed when we get down to 143, let's call it 143.50. And if that's the case, we've got, 1,300 pips up our sleeve for a risk of 110. That'll do me. Obviously, we won't bank all that because we've taken profit, but we'll scale back into that at some stage as we get lower highs or breaks of levels and retests of levels. So, yes, Alan, that's true, and it can be done. So that's my analysis on EuroCAD and the cup and saucer. Yeah,
cup and handle.
Definite cup there. No saucer, but yeah, there's a handle forming. How do you deal with that, mate?
So firstly, let's have a look at this, and we had some discussion over the last week when we had the Master Trader course about some of these charts. So EuroCAD, firstly, well, there's a few things to kind of note about looking for a cup and handle, and a cup and handle is a bottoming pattern. So the first question you always have to ask yourself is, where does the pattern exist? You can see inverted head and shoulders, cup and handles, wedges, everything else all over the chart. But when you're looking at this, yes, you've got something that looks like it could be a cup, and maybe it starts to form a handle. Firstly, this isn't really kind of giving us any proof that this is turning here to form that handle. So that's got to be a few days to kind of to go into that particular handle if we were to judge it as that particular pattern. So there's not really the start of a handle from what I can see. It's just a market which has flown to the upside. It's curved back up and it's coming back down again. And it might start to form some sort of support line along there, which then you could start to say, yeah, okay, well, that looks like a handle of a cup and handle. I wouldn't really want to treat it like that for two reasons. Firstly, it's not the bottom of the range. So if the cup and handle is more of a bottoming pattern, this one is more of a continuation area than a bottom area. But secondly, with all these charts and with all these things that we see, really we should look on the monthly, because it's the monthly that we should we always need to make judgment calls on when we are looking at some of these broader patterns, because that's where they came from. They didn't really come from anything shorter than these patterns. Yes, you could argue about the weekly. I could make I could certainly hear that point. And it's not that we don't trade head and shoulders patterns on a 5 or a 15 or whatever else. It's more the fact that with such a significant time frame like the weekly, then I'd be much more interested in hopping up to the Big Daddy, which is what's the monthly chart doing at this particular point. And if we look at what the monthly chart's doing instead, then what we have seen, or what we are seeing, is firstly this range up here. on the monthly, which hasn't been able to penetrate. It's really scruffy. It's a horrible chart, actually. But there's we got this range here, so we're at the topper end, maybe at the upper end of that range. If we use closing prices as well, it's even scruffier in many respects. But it's a very, very scruffy range. But it looks to me like we're at the top end of the range. The one argument that could be made is that the high will maybe be seen one more time, so maybe that does become a level of support there and we start to go up again. But that's the area that I'd be looking for potentially some downside. So I think the range looks a lot cleaner to me than anything else. There is this also in the offing as well, so it looks like a potential for a pattern in there. That looks all right, doesn't it? That doesn't look too bad as a breakout. So if that was a breakout, what's our measured move on that? There's the measured move. There when it flew out. So it's kind of done the measured move as well already. So it's got the green light now to kind of to start a different phase, if you like. This particular channel and the break of the trend line and retest. It has kind of gone through it has gone through the measured move. It has reached that measured move pretty much within the pip. So there's not really necessarily too much of a case to say, you know what, this has got some further upside to go. It looks like it may have done it. And for that reason, I think this chart is just too difficult to read. So cup and handle would be, I think, stretching the friendship a little bit, and probably maybe looking for something which doesn't exist, hoping that there's more information there than there actually is, because I just don't see that. And even if we were to go to the weekly, again, I don't see the handle. I see potentially you could say that's a cup pattern, but there is no handle that's formed. The handle's got to take 3 or 4 up to 10 days really to form before it sort of starts to show a bottoming out. Then maybe we could have a look at it again and say, do we have something which does suggest a bit of a turnaround in fortune here? Now, somebody mentioned gold earlier on, and I just want to go back to this, what we were just talking about with the average true range. So I can't remember what the comment was.
I think Dennis was just saying, I hope somebody's in the intraday gold and silver trades.
Okay, so
long, I think he was talking about.
Let's just consider this and just sort of like, just touch on what we discussed earlier on. If you are trading gold and silver right now, I can't see the post. I can't see the post, but maybe I read it wrong. But I thought what I read was somebody should be day trading this or something. Yeah, I can't see what the post was, but let's say we, that I did
someone
read
is
it right.
Taking intraday long on the gold or silver. Right?
Intraday. Okay, that was the key. It's the intraday which is the key. Let's come back to what we were talking about with the average true range, because and I understand that this stuff doesn't filter in straight away, so I think it's worth touching on again. So the average true range on gold on an hourly time frame is around about $10. Now the last bar from high to low is around about 15, so it is larger, but it isn't that huge. It's not double. It's not like what we've just seen with the stock markets and with the way they go. Now, if we bring this onto a 4 hour, then we see it's more like 19. So the 4 hour really from the very lowest point to the highest point is 19, and it's it's in the average true range now on a 4 hour. So there's nothing particularly out of the ordinary with this, from what I can tell. You know, the 15 is $3, and you could certainly say that this one is, you know, triple that. So it would indicate that. But we're not really seeing, when we're looking at the average true range, we don't want to know what the hourly is doing, what the 15 is doing, and what the 4 hours doing, because there could just be an unusual spike. You know, for many different reasons, and that unusual spike might have just been because we saw the stock market kind of like starting to fly to the upside. If we look at this on the daily, then look at what the average true range is on the daily currently. It's at $48. Now, from low to high on this one so far, it's only done $20, so it's not even halfway home. So this isn't suggesting a massive pickup in volatility on the day so far. So looking at this on an intraday basis would not be wise for that reason. Now, looking at this on a daily, day-over-day basis, you know, a swing trading day basis, I get it. You know, I'd get the argument for that, which means we should be looking at day trading strategies and not intraday strategies. Now, to just illustrate what I mean, we come back to the FTSE. The FTSE's average true range on the day is 112 pips. Now, this one's done 110 in the first hour or so. So it's already done. It's almost done the whole range of the day within the first hour of opening. You know, that we've only just gone over the first hour of opening. So it does suggest that this is probably the range of the bar. But at least it gives us a strike price at the top, and maybe, you know, if we can get fortunate enough to pick it up, then we can maybe look for a bit more movement to the upside. But you remember I was saying that the most likely move probably is going to be for a short rather than a long now. It's just starting to come in. You know, the short is just starting to come in, but there's a lot more information with the FTSE than there is with gold, because aside from that hourly, aside from the 15 really, and maybe the hourly to a point, the daily doesn't look like, the daily is nowhere near its average true range right now. So it doesn't look like there's huge volatility in gold. I'm not sure about silver, but we'll have a look at that as well. Now with silver, the average true range on the day is really high. It's 1.9, it's almost $2. And this is currently, you know, 70 cents or something, maybe 75 cents. So it's that again is nowhere near it. So don't get caught into it too much. You know, I'm trying to understand what the average true range is telling you. This bar here is a big move. That's $4. So when this move starts to establish itself, then look at the difference in time frames. We'll compare the two effectively. This is today, and that's the 4 hour one. Sorry, the day that really moved. Look at the difference here. The 4 hour here at this particular point was at about 73 cents. Now down here it's around about 50. So when that does 50 odd cents, you know, when it starts to go 50 odd cents and breaks through, then we can start to say this is starting to get highly irregular, and the volatility is overblown. You know, the volatility at this point is starting to get overblown, and then we sort of, you know, we can go down to some of the shorter term time frames as well, and we just see this pickup. Look at how that's picking up and picking up and picking up. Now look at what's happening today. It's not picking up, not in the same way. Not picking up and picking up and picking up. So it'd be too early. You know, it's not to say that this may not change through the day, but at this stage, it's way too early to say that we are, you know, getting an average true range which is starting to get overblown. And even if you kind of like put a cap on this, maybe there's even a bit of a trend line break here. This starts to break through, and it's starting to suggest that the average true range is creeping to the upside, and then it starts to really fly. So there are opportunities in this one if we start looking at these indicators for what they were and where they are going. Whereas with this one, if we look at what it was and where it's going, it's still kind of caged within this range that we've seen back from the 21st of August. You know, this hasn't really given us a huge indication of a big pickup in volatility. The FTSE, you know, it already started its journey high here, so we're in an upper band range up here. You see, we're at the topper end of the average true range on the FTSE, but we're not with gold and silver. You know, if anything, we're quite muted in some respects down here. So the average true rate, it really has died down. So trying to day trade this is going to be very difficult. If ATR is 100 and it's that now, but retraces 50 pips. Sorry, mate. Let me just read that again. Ash. Sorry, let me go back to the start. I said, but now intraday. Yes, long Jeff. I have no idea. Oh, that's okay, mate. Yeah, that's good. That's a really good start. To trade it off the DXY is a really good place to start.
Yeah, you've noticed the correlation. Perfect.
Yeah, and actually you can probably bring that that particular theory into just about anything that you do, in many respects, and it works well for me. Oh well, if it works well, mate, then that is the most important thing. I mean, that's
the best strategy of all.
Yeah, and it wouldn't really matter. It doesn't matter. It doesn't matter what my analysis is, because if you've got something that works, that means your analysis is working, and you should stick to it. So I don't want to put you off. I'm just telling you what I'm seeing. Ash, as it retraces, that takes off from the ATR. If the ATR is 100 and it's that now, but retraces 50 pips, then the ATR now for the day, yes.
Well, actually, no, it can't change. The
ATR. So for the day, you mean? You talking about for the day?
Yeah, the range can't change.
No, the range on the day won't change.
But what it does allow you to do is trade it back to that 100. I think that's probably where you're coming from, Dennis. Is that right?
I think if that's what you mean, that's what we're looking at with the FTSE. So with the FTSE, the ATR is at 120, 112, and that means that if it starts to cut now, the 112 is pretty much from low to high from where we are now. We've got about another 12 pips to get to the ATR today. So that means that this would probably be somewhere near our target. So if we're looking at this on intraday, then we know that it could get there and still be within the average true range. So we can we've got some room now to trade this. So if it does come back, then we might be able to pick this up and have the confidence that that it's got a little bit of room to go. It doesn't look like it's coming back too far, but if it comes back to around about 60, then it's got some a little bit further to go. But if it comes back 50 on an intraday chart, it starts to come back 50 on an intraday chart. It doesn't, as Jeff says, it doesn't affect the ATR on the day, because what will happen is that the ATR from today's range will go into the calculation for tomorrow.
But yes, you're right, Dennis. That's exactly right.
Yeah, it's not a tricky indicator per se, but when you start breaking down with different time frames, it can get a bit confusing. But really, all you're doing with the ATR, well, all I'm doing with the ATR actually, but everybody uses it differently. But all I'm really doing with the ATR is trying to look at what are the opportunities for price to move. Now, if the FTSE is currently at 112 ATR, that means there is near a 2% swing potentially in the FTSE on a day-to-day basis. Now, that's a really good number to try and trade this intraday, because if we start going back, let's go right back. Oops. Let's go right back to, I don't know, February 2019. look at the ATR down here. February 2019 is at 55 pips. That means the range that we've got to work within is less than 1%. And that's going from the very, very highest point in a short to the very lowest point, or the very lowest point to the very highest point in a long. So we don't have much room to kind of to make decisions on an intraday basis. Don't have as much room, I should say, to make decisions on an intraday basis. And it means that we might only realistically be looking for probably half that. You know, we're not going to expect to kind of pick the very lowest point and the very highest point. You know, we'd be really, it'd be great to get within a 25% range of both areas, which kind of gives us around about a 50% move probably. So it just means that but when we come to look at our charts, it just gives us a more realistic view of what our opportunities actually are. And we're not saying to the market, and we're not saying to you know, whoever it is that we're telling about our trading, I'm going to target to make 1% a day, because if you do that, or 5% a day, or whatever it is, because if you do that, you are making the mistake of telling the market what you're going to do rather than allowing the market to tell you what is available. Now, over the course of a month, there may well be 1% on offer every day, on average. But you have to recognise that that there are going to be some months like this period here in June of 2019. What was on offer was 90 pips to, looks like about 68 pips. So there wasn't, you know, this wasn't a great opportunity for intraday trading. But then all of a sudden it starts to pick up. And when it starts to pick up, then the opportunities for intraday trading do start coming into play. Now, the other thing you have to recognize with the ATR, which makes it, you know, just like all the other indicators, it is backward looking. So it can't tell you the implied volatility, you know, as the VIX would do, for example. It tells you the historical volatility. And we know that history is no necessarily mark of the future, but we can still utilize it, because we're going to use all the other parameters that we use in the market, like understanding the environment that we're in and saying, well, there's no reason for volatility to change here, so I'm going to continue to kind of use the ATR as a benchmark. But if you start to see things calm down, then you might expect that ATR to also start shrinking. So, you really want to try and get out in front of any indicator that you are looking at, because these indicators are lagging. You know, every indicator we have on our chart, even the price bars to a degree, they are the best possible lagging indicator that you can have. But even price bars to a degree are lagging, because they will only tell you what just happened. Well, with the VIX, I mean, the VIX is the VIX. Maybe let's come on to the VIX tomorrow, because it's probably a good heart. In fact, I'm not here tomorrow, am I? Wednesday. I'll be in on Wednesday. No, I won't. I'll be in on Thursday. It's you this week, isn't it, mate?
Let's get that right. Sorry?
You and the team. Oh,
yeah, yep, that's right. Absolutely true.
Have we got time to have a quick touch on the VIX?
I'm okay.
Okay, all right, let's touch on the VIX then, because I'm not here till Thursday, so maybe we should touch on it. So with the VIX, let's bring the VIX in. So with the VIX, oops. It's an implied volatility for the S&P 500, and it is calculated by a whole bunch of numbers that are the options for options expiry. So it's really telling us what the options traders are doing, and because options kind of like have a future strike price that it has to meet before they're triggered. You know, there's an agreed price between options traders, and they say, look, if the price gets here, then I want to buy. if the price gets there, then I want to sell. So an options trader is is really kind of like setting a contract for the future. And they can still refuse it if it hasn't kind of hit their price. So the VIX is calculated by all these options contracts, and you might get some open interest contracts and the in the money contracts as well. So it's a pretty complicated calculation, and I wouldn't even know where to begin trying to calculate the VIX. But what it is telling us is implied volatility. It's trying to establish implied volatility. So if the VIX goes up, and there's not really a hard and fast rule by it, but if the VIX goes up by a certain amount, it is telling us that the implied volatility is likely to increase. And you could use the rule of thumb with the VIX. If it goes up by 25%, then the implied volatility is likely to increase. Now look at this area here. This is the 10th of June. Now the VIX goes up by 25% about there on the 12th of June. Okay, so on the 12th of June, it's the implied volatility of the markets has started to fly to the upside. Now let's bring in the S&P 500 because that's what it's gauging against, and look at the 12th of June. Here. So between the 10th and 12th of June, this is what happened to the S&P. It drops right down. But then look what happens. It bounces right back up. Now look at how big these bars are in comparison to what we've got going on right now. And then we'll go back to the VIX. I mean, we can talk about this also a bit more later on. But look what happened to the VIX there. Oops. There's the VIX, and then all of a sudden the VIX starts to die down. So we're really looking to read the VIX to get an implication of what the volatility is. And if we have got positions in the market that are long, then we already have an increased exposure because of the volatility. When the volatility increases, it increases our exposure without us doing anything. Because if the swings become more violent, if you've got an exposure in the market, if you're risking I don't know, $500 or $100 or $1,000 on a trade, if you've got $1,000 worth of risk on a trade, then your risk has increased by 25%. Because the VIX has gone up by 25%. You know, if you're correlating it to the S&P, that is. Now, the VIX dying down like this, then it's suggesting that the volatility and the risk of us waking up on Saturday morning and being gapped in the market is very unlikely. But when this kind of thing happens, when we start to see this gap, now there would have been enough here with the VIX when you saw from the 10th of June, on the 11th of June, when it gaps to the upside in the way it did, because that's a pretty big gap. That gap was a 10% move. Now that's a pretty big gap when you wake up the next day, and the VIX is on the let's get rid of that, on the 12th of June. Sorry, on the 11th of June, and it's gapped forward like that. So we want to keep an eye on the VIX just to make sure, because if you'd seen that on the 12th of June, then you would have got this bar here, and it let me just go back to that. The 11th of June, sorry. You see that gap on the 11th of June. Now, if you wake up on the 11th of June and you see that happen with the VIX, then seeing something like this happen wouldn't have been all that surprising to you. You know, that's a massive drop down in the S&P. I think it's about a 5% drop in the S&P in one session. So that's why looking at the VIX is really interesting. Is really important. So it shot back up because hedge positions for a higher level in the market. I don't understand that question, Helen. Sorry. The reason it shot back up is not part of our concern in many respects. We don't really mind why it shot back up. We don't really know why it shot back up. Yeah, you know, you could certainly come up with a lot of theories of why it shot back up. You know, the market seems to be higher today because of more talk about a vaccination, but it may not be that. You know, we don't really know why. All we know is that there's information out there to help us determine what kind of market we're in. Now, the S&P has just been in a slug grind to the upside since the start of this month. It's just been moving to the upside. Sorry, since the start of July, it's just started to move to the upside very, very gently. Now look at the VIX. Since the start of July, the VIX was coming down. It had a little pop to the upside there. But look at what's been happening since the 14th of July. The VIX has just been grinding lower and lower and lower and lower. But what we now know is that the move that we just saw on the VIX, the move that we just saw on the S&P, where it just threw to the downside, was preceded by a 10% gap to the upside in the VIX. Now let's go back to the COVID situation. And again, look what happens. The 21st of February to the 24th of February. So over the weekend, I mean, that would have been hideous, really. But over the weekend, this happens. And you get a move which on the VIX ends up being 28%. A 28% move over the weekend on the VIX. And that was on the 24th of February. So let's go back to the S&P again, the 24th of February. Is this gap here. Now you would have missed that move, but if you are a fund manager, what do you think they're going to do here when they wake up on the 24th? In actual fact, it gapped down on the 24th, and you still had a chance because you saw that happen to the VIX. It gaps to the upside. This gaps to the downside. What do you think fund managers are going to start doing when they see the VIX gap to the upside and it's got a 28% move? And that's for you, Helen. If you were a fund manager and you're calling your traders into the office and you're saying the VIX has just taken a 28% jump to the upside, what are you going to tell your traders to be doing? If you don't know, that's fine to answer, I don't know. Exactly. 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 What you would tell your traders to do in this situation is get out, close your positions, close all your longs down. This market is on its way. Yeah, you could. I mean, there's lots of things that you could do, but the point is the market gave us a pretty strong message that was going to be falling, because if the VIX has jumped 25%, and we know that the market is run by these market makers, then what they're telling their traders to do is get out, get the hell out of the market, free up cash. So when the market does drop down here, you are still in the game to then go and start buying stuff back up again. Maybe they started buying here well, let's call it the first of first of March, just for ease, and let's see what happened sort of like around about the third. So this is what happened in March. The VIX starts to die down again, but then all of a sudden volatility starts to pick up. Now you wouldn't know this was going to keep going to the upside at this point. It would look like that the move in the VIX was done, but look at the close correlation that they've both got. So straight away, you know, it's quite important to build your barometers when you're trading, but straight away you now have a direct correlation between the VIX and the S&P. So the VIX now starts to drop down between that point and that point there, 15%. So it drops down 18% between just get rid of that, between the 28th of February and the 3rd of March. It drops down the 4th of March. Oops. So that's this area here, 4th of March, starts to move to the upside. Nobody's too worried at that stage. But then this bar happens, which is on the 5th of March. And on the 5th of March, this happens. Now, if you were some of the people that had bought in the market at this stage, and you just seen that, and we look at this chart pattern, that is suggesting continuation at this point. You see that bar, it's starting to suggest continuation. So we can start using our chart knowledge. Now, let's say you missed that move. You missed the fact that it was changing again. So now you've still got long positions. But then all of a sudden, the VIX jumps another 38% by the 10th of March. And that's here. So when everybody starts buying back up in here, you're telling your traders, just get out again. So I might have started to buy in at this point, but I'm closing my positions here. I'm not losing too much. Now, it wasn't until the 23rd, 24th of March that things changed again, which was here. And now what we have with the VIX, if we start reading this, this is a chart, is a buying bar followed by a big evening star by the 30th of March. So 30th of March is the first indication, first safe indication that it might be time to get back into the market. And then from the 30th of March, what we really saw with the S&P, that's the 30th there. That's the 30th there. But what we saw from this particular area in the S&P, yeah, it came down a little bit. So, you know, timing it's not. I'm not saying that timing it by any stretch is that easy. But what you do have here is a potential that you've now read that the S&P has maybe made a higher low. You've got a load of liquidity coming into the market from Jerome Powell, and sorry, a higher high. A breakout of a pattern. You've got loads of liquidity coming in. You can see the VIX is maybe putting in a reversal pattern, and all of a sudden those funds start to buy up again, and they're not bothered about, you know, whether there's these moves down here. They'll be quite happy to put the stops at the lows. You know, they're sort of they're trading with completely different risk management to the rest of us. So they might even have their stops at the lows. You know, 450 pips down. But if they were to have done that, then currently they are. They've doubled their money in the course of 6 months. So the information right now on the VIX is that the funds can continue to buy. There's no panic here right now, but we'll keep our eye on the VIX, because it might give us an indication. And that you know, really that's as well. That's for you, Shukri, too. You know, that's something that you should have a look at, because it will give you a really good indication of what's going to happen to those cryptos, I suspect. Right, you are more than welcome. You will have to create your own, Helen. It's not that easy. I've been looking around to create a VIX for some of these other things, and it's really difficult because the options data isn't available. There is a VDAX, so there's a VIX for the DAX. I think there's a VFTSE as well, but the but the information just isn't as readily available. I don't think there's a V Gold. Let's have a look. No, there's no V Gold. I mean, there's a VDAX. Let's have a look. VDAX. Yeah, you got one for the DAX. There's a VIX for the DAX. But they did, you know, the way they calculate it and the way that you'd have to calculate it are in two different ways. You'd have to use a pretty simplistic version, which would still be okay. But how you get that options data, I don't know. If anybody can tell me that, that'd be fantastic. If you can find the options data, I'll show you how to create a volatility index for that particular asset class. I can do that bit, but I can't find the data. I've looked. But as my girlfriend will testify, I'm not very good at looking for things. So you might have more success than I will for finding it. Anyway, mate, I think we're probably well over time now, aren't we?
Right, bud. You duck off if you have to. I've got a couple of questions I need to answer, and I will do that.
All right, no problem.
And I will catch you at 6:30 Singapore.
Fantastic. All right. See you then, guys, and enjoy the rest of your day. And I'll speak to some of you in the US show later on.
Right, mate. Catch you then. Right, guys. 3 questions I'm going to answer. One is pound yen, and I think Sino, was it you looking for a short, perhaps? Yes, it was. Great question, mind you. And the question was looking for short on the hourly chart, but after the pivot test. And I love that part. Daily pivot, weekly pivot, very, very close together. And I say this very, very often. When that's the case, you'll find that price is very, very reluctant to travel away from those areas before they're tested or broken. And if you don't believe that's the case, then have a look at the daily pivot and the weekly pivot when they're close together and what price does. It comes back to it, comes back to it, comes back to it. And we're a little bit away from it. Are we going back to it? Good question. Have we been back to it, or is that close enough? I don't know, to be honest. Am I biased to the downside? Yes, I am. And I totally get that. We've got a very strong level through here, and we have partially rejected it. I wouldn't say that that's a very, very decisive. Bye-bye, Helen. I wouldn't say it's a very, very decisive rejection, but it's there. The interesting part about that is if you go to the daily chart, we've got, same as I said before, I think it was on pound CAD, we've got an engulfing bar that engulfs about 6, 7, 8 days of trading, maybe even more than that. So that's significant. So yes, pullback here, and I'll be looking for shorts. Have we had the pullback on the hourly chart? Great question. I don't know. It's a bit messy here for me right now. I wouldn't be trading it now, that's for sure. So waiting for that pivot test is probably the right approach. 2 more Euro Kiwi and then the dollar index. So Euro Kiwi, I think it was Alan wanted me to repeat my analysis on this. And my analysis on this is very much the same as we've just had a look at, really. We've got massive rejection bars here. And yes, I know they're of the $2 level, and we're nowhere near that, but they are signals. You know, they're telling us that there's something smelly up here, and we don't want to know about it. There's also a big rejection bar of a price under that, about 190, back in July of when? I can't see because I've got my control panel there. No, actually, it's not July. Yeah, it is 2015. So that's how significant the level is. We haven't been able to, we've had one close above that level since 2015, so 5 years ago. And now we've broken back below that level and we're retesting that level. So what's my thought process? My thought process is that if we couldn't, well, if we broke out of it, when back in March, was it? Yes, back in March. If we broke out of it back in March and now we're back under it 3 months later, Why am I thinking we're going back there again? And the answer is I'm not. I think we're going to have a rejection here, and maybe even only to the bottom of the range. So I am biased short, and there is a big set of double top sitting right there as well on the monthly chart. And if you have a look at that, it couldn't be clearer. And there's a level there that's a similar level that's been rejected in the past as well. And you can see that this level has got strong history. So that's the level that we're trying to break through again. And I don't know that we can do that. And this was a very big signal that that's not going to happen, and we are going to see lower prices. So that's my analysis on Euro Kiwi, and it gets down to why am I now ready to go short? These tweezer tops that I saw last week, or was it the week before? No, it was last week. And all we were waiting for was a lower high. We didn't get that yet, but we got another rejection of this level and an engulfing bar on the daily chart last Friday. So today, what I'm looking for is still the lower high. And if I get the lower high with a bar that looks something like that, then, or even like that, I'd certainly place a sell below it and my stop loss above it. So if that candle does retrace back, then I would be looking to sell that bar for sure, because that could well be the lower high that I'm looking for. It may not be. And if it's not, we would hope the buyers would still be buying and don't take us into the trade. So that's my analysis on Euro Kiwi. And finally, the dollar index. I'll have to share a new chart. Hang on 2 secs and I will do that. Rightio, dollar index has been a bit of a flowing ride for, hang on, I'll see if I can widen that out just a little bit further. Get rid of all those numbers that I don't require. Okay, there we go. So where are we? We're at 93.09 at the moment. We haven't been able to move from there for a day or so, maybe even more than that. But I'm looking at the monthly chart, and that's where I like to get levels from. And you can see how strong this level's been, exactly where we are now. We've had strong support, strong support, strong support, resistance through here, support through here, support through here, support through here. And I've now gone back to when Jesus played fullback for Jerusalem. So we don't need to go any further than that to understand that that level is quite strong. So point number one. Point number two is we haven't been able to come back to this monthly trend line since this level here. And if you've been following my analysis, I've been waiting for this to happen, calling it for it to happen. We were calling for 98.18, if my memory serves me correctly. And we missed that by a few points, a few pips, getting that pullback to that level here that we were talking about some months ago, a couple of months ago. So now I'm calling for it to come back to this level here, which is, let's call it 95. And the reason is because it's been support here, it's been resistance here, it's been support here, support here, support here. And if you keep going backwards, you'll find that it has been support through here, messy resistance here, but resistance here, and again, resistance here. So both of those levels are quite strong. And when I just apply pure logic, so very little to do with smart analysis, pure logic tells me that when we hit a boundary, we're going to bounce and we're going to go back to the other boundary. And the analogy that I was first taught when I was learning technical analysis was that these are actually fences, and price is actually cattle moving beyond, in between those fences. And when they hit one, they tend to wander towards the other, chewing grass all the way, of course. And that's why we get those little pauses and retracements, etc., etc. I know that analysis or that analogy probably doesn't really mean much to anybody, but I just thought I'd revisit it from my not my childhood, but certainly from the first lessons that I had in technical analysis. So I see this confluence area, right, at that 95 level, and I know I've just moved that trend line. I didn't mean to. It just moved a bit, and it belongs pretty much there. So that confluence level there around about the 95 mark is the point of interest for me right now. And is it Is it sure? Is it certain? Is it absolutely going to happen? No. But is it worth thinking about? Yes. So from my mind, the dollar index is in a position where it's going to rally short term back to 95. That should give us plenty of opportunity on things like euro dollar, Aussie dollar, Kiwi dollar, pound dollar, all of those potential major currencies, I think, are opportunities to trade short against the US dollar. And we'll see how that goes. So I hope that has cleared up all the questions that I had in front of me. I think it does. Shukri, if it goes down to the next horizontal level, Bitcoin goes to 20,000. Because that's what it did in 2007. Please go up to 95 first on the DXY. Yeah, look, that's what I'm counting on, Shukri, probably not to trade Bitcoin, but I'm sure you'll help me out there with, what am I trading now? IFY or something? And something else. I'm going farming. I'm farming something. Can't quite remember, but we'll learn more about that tomorrow night, of course. So there you go, guys. That is how I'm analyzing the US dollar index at the moment. It's why I see Euro Kiwi as a sell, but only if you get the right signal. And it's similar to why I see pound CAD as a sell, but of course you have to have the right signal as well. Did I do pound yen? I don't know that I did. Yeah, I did. I did do pound yen. And perfect analysis from you, Sino, I think it was. Yep. Daily, weekly pivot. They are the key here to trade anyway. It may not happen, but yeah, we're in a bit of a range here, and certainly you'd want to see that tested before you went short, in my humble opinion. Righto, guys, that is the show. We will catch up with you guys, as said previously, in the 8:30 preview of US session, and then of course in the US session for those of you who are subscribers. Switchio first, farming. Okay. So have a great rest of Monday for those of you who won't be joining us later, and we'll catch up with you when you can. Hooroo, guys. Bye-bye for now. You're welcome, sweet.